All right, is my audio good? Yes. Okay. Looks like we're live. Market's moving today, down 75. I wanted to pull up the last trade I was talking about. Looks like we're live. Okay. So, yeah, down back to 6,900. I think that's kind of where we were around this level last time. I put a trade on. Let's check it out. Let's also look at VIX today. It's got to be spiking up a little. It's kind of surprising. Yeah, but we were down here under 15, I think, when I was talking about it before. That was an interesting spike. Got up into the yellow level there. But now we're actually lower, way lower. And let's look at them side by side here. If it pops up. Get them on the same level. So that was a pretty large spike. I don't know why it's not coming up here. Let me cut this back down. Oh, that's why. Yeah, so we had a big move. It was what, 80-point move from the high to the low. So we got a much larger move today. But okay, volatility is back up into the 18 level. No, this is futures, not VIX. Hold on. Yeah, but see, it's not nearly as high as it was the other day. Actually, this is closed. Only futures are open, aren't they? Yeah. Interesting. So we're actually not seeing the move today. Because, I mean, this would be like down here. Down like $7. So the only thing we can look at is /VX. So we are way up higher. That makes more sense. Big drop, big spike. Now's the time to scale up. But let's go check the trade that we had on and check which new trades we could put on today. So we'll go to my last video here. This is what I was looking at, trying to capture some negative delta here. So it was 6,000 and then 65 and 67 for the spread, and that was February 27th. So let's go check that in the trade tab here. February 27th, that's still 39 days out. What did I say? 67, 65. It's around the same deltas. And then 6,000. This is going to be way less. Okay. So it was a 1-1-1 trade. We paid 10, like 10.50, around $10 for it. Now it's trading for 14. So this would actually be a slight profit, like $20 to cover the fees and a little bit more. Buying power is only $200 in this trade now. So that's where the big difference is. If we look back here, buying power was like $700. So it's cut in half and a little bit more. So that's pretty interesting. But now is a great time to scale up. So this, I'll probably hold this a little bit longer. Let's look at the curve mode. See where we're actually at here. So see, we were up with like 7,000. Now it's dropping back down into the range. At this time, we have this huge hump here. So if we have a decent amount of negative delta, I hate that it doesn't show the delta here. But yeah, we could drop a couple hundred points more into this level, down at 6,700, even down past the 6,500. We would still be profitable in this trade. And then as time goes by, when we got closer, it would even be more profitable in the trap here. So we could look to scale this up in a few different ways. One way would just be adding on another put way out here. And then it would look something like this. It would increase the buying power up to 900. So a little bit more than it was before. We would then have a credit on the trade. We only paid 10 before, so it would be like another $4. So it would, our total credit would be like $6, which is like $30 on the tail, which is not a lot. That's not really what we're playing for. Damn, my internet cut out. Looks like it only cut out for a second. Another thing we could do if you want to take a little bit more risk, if you think that which this looks like it could be day 1 or day 2 of this down move, which we'll probably get a couple of days. So we might be able to scale in more later. Doing one put way out here might be a good option. Or we can also bring it in a little bit, maybe to like a 10 delta. Maybe sell something like that. Let's look at how that would be the 62.50. Pull that up on the curve mode here. Gives us a smaller gap here, but it adds a lot to our credit, and it moves that max profit level closer to, you know, inside the short spread instead of in between the shorts, closer to that 6,700 level. And then we can play with this in here too, move it up and down. It's not that big of a difference. And remember, we have another $4 in credit that would be added on to this because of the difference in the price now and what we paid for the 111 trade. So you can move it up. We could sell something closer. I wouldn't really do that unless we had a continuation. But it would be nice to sell something out here just to add a little bit of room there. You can see the price doesn't change that much up at the top. For right now, but as you go on further in the trade, let's go back to where it was at, the 62.50. Actually, I don't think I would sell it 40 days out either. So hold on, let's go back here. Delete this one. Let's go out, look at some of the volatilities over here. You can also get further away. You could go anywhere from 60 to 88 days. Let's look at 60 first. We'll do the same strike or the same delta. Let's start at the same delta. We'll do 61.50 and then we can move it up. So here's that. It's pretty similar. It's further out, so it gives you a wider range. The buying power is a little bit higher. you were to move it up, you have a similar thing here. Kind of see the difference. So you notice here, the level kind of stays pretty even, the max profit of your trap. But as soon as you get to around, what's the difference here? $200. Once you get close to that $200 on the other side, then it starts dropping a lot. And you're not getting too much on the tail end. You're not adding much to your tail. So you want to be able to keep your trap kind of wide. But you are getting a pretty decent credit. So you can turn a trade that you paid a little bit for it into a credit. That way if it does go back up, you're still making a little bit of money. It's about 1% or less than 1% of the total account. But you have a lot of money in reserve just in case it keeps falling. Then you add more. You can add more probably down farther and widen your trap even more. So you could just sell put anywhere. It just depends. You just add the difference, what you paid before, what it would be trading for now, and then you can look at that profit there. So you're still playing for a down move here. Later in the trade, you'll make a lot more money inside the trap. All the way up to selling the same exact strike in different expirations. I wouldn't really do that unless the price got down here. Then you get paid a lot more as well. See, like if you sell it at the money, you can get a credit like that down here if the price moves down here, right? Even if you were to sell something inside the spread, then you have a pretty decent tail. So you get this kind of weird shape there towards the end of the 111 trade. This is nice to do once it kind of falls into this range. So it's a pretty interesting setup. You need a lot more money buying power wise if you want to sell it closer to the money, right? $3,000 into the trade, or if it's way down here, it's only like 1,300. If you go to the outside, then it's even less. But anywhere you have a credit now, which is super nice. If it were to fall into the trap, you only have 800, well, 900, we'll round it up, $900 in buying power. If it comes down into the trap, that might increase a little bit, but then you're in the profit zone. You're making $900. You have 2 naked puts, so you want to actually have maybe $8,000 to $10,000 in the trade in reserve and what you're putting up to put the trade on. But at that point, you're making, $1,000 off of $10,000 is pretty nice. It's 10%. So if you get that within a couple of months, in the first quarter, it's a really nice trade. And you can scale up more. So you just got to figure out where your risk is, how much risk you want to take. Selling it out further is less risky, right? You have the bigger hump. Selling something closer, you can take advantage of a rally if we get a little rally here. And then we can go out further in time as well. See, right now, if it goes back up, you're going to actually lose what you paid for the trade, which is like 10, which is like 50 bucks. So you go out further in time, you go out to like 88 days. I don't know if I would go out too much further than that. Same thing. The 10 delta's like way out here. See, that's actually further outside than where it's at now. But you get a decent credit for it right now. So it would bump your credit. Your total credit would be up over 30. So you're taking that, $50 that you would have paid for the trade. Now you're collecting like $150. Same thing, you want at max 10,000. It's just easy to do the math. If you're collecting $150 with a $10,000 account, it's 1.5% on the tail. That's if it doesn't fall back down into the trap. If it falls back down into the trap, you're going to make a little bit more. You can move this up where you're collecting almost 250, 200 to 250 would be 2%, 2.5%. And you still have your break even way down, like, 700 points lower than where it's at now. So anything in that range would be nice to sell. You sell put for like 50 credit. If you think the market's just going to go right back up to where it was, you can sell something a little bit closer, but you got to put up more money, and you're moving your break even way up. But still, you can keep it down. It's still a couple $100. You're not really going to lose much money unless it goes past your shorts. But it's nice to keep this profit line pretty steady. That's generally what I like to do. But we're up in that other range where you want to kind of take advantage of it. Oops. I don't have my colors on here, but if it's 19 here, spiking up a little bit higher than that, it's probably definitely over 18. You can't see it on here either, so let me go back here. We're definitely up here, maybe almost to 20. It's definitely time to scale up at least one. You could have probably scaled up when we got up into here. These couple of days, you had a couple of days here where you had chances to already add one, and now that it spikes up here, you can add another one. You can get a little bit closer. So that's kind of where we're at now. So it's interesting. There's a lot of things you could do. Let's go back to here. So we had one down day. You could see it kind of. I mean, you had a couple here, but it didn't continue up. It went up, it went down, kind of closed in the middle, We get that a lot before it drops. I mean, it happened right here too. I don't like this thing following me around. So we got it here, went up, went down, kind of stayed in the middle. It's adding some volatility in. See what day is that? The 13th. It was here. So volatility spiked up, right? The price didn't really go anywhere, but there was a lot of movement. That is a sign that we're going to drop, which we did the next day. We dropped a lot. It came back up. It didn't close down here. So that's a sign that it might stall, which it did. It went, went up the next day, but didn't. But then again, there was a lot of movement. We had the spike. It dropped back down. And then the same thing again, where it moved around a little bit. Didn't really go anywhere. We got a small spike in volatility. So really could have gone either way when you look at volatility and you look at the price. It could have just continued, but it didn't. It decided to gap down and fall down. Now it's coming back up a little bit. It's already up like $10. So this spiked, but it's coming back down. So it could, same thing, it could turn again. I mean, if you look at like the last time it dropped, you had the same thing here. It didn't really go anywhere, but it moved. Then it dropped, it stayed at the bottom. Dropped, it stayed at the bottom. Dropped the next day, but didn't really go anywhere from open to close. And then it shot back up. So you get those kinds of days where it moves a lot, but it doesn't really go anywhere at the end of the day. So yeah, if it continues up, or if it kind of closes here, we might get a bounce. If it does open up tomorrow and drops down and closes towards the bottom, that might be a sign that it's going to continue down. So we'll see what happens. That was weird. That just popped up a little bit, but the price isn't going down. But basically what we were seeing before, I don't know when exactly it was that I was looking at that 111 trade, but I think everything was around the same position. I don't know if it was over here. It was like a month ago. So we've had some movement since then. If we're in about the same spot, went down, went up, I think we hit all-time highs again, a new all-time high. But we're back in the same spot. So your trap is set at 6,700, which is way down here. So we can get a couple of really big down days, almost like what will happen back here, before we scale up more. So if you didn't scale up, you probably could have got in down here, some money the very next day, and got out real quick. You might have that same opportunity again, get in down here if you got in at a little bit earlier when it was down further. You might have a chance to get out tomorrow or the next day if there's a little rebound. If not, you just hold it. But yeah, you should definitely be in a little bit here. We might have a couple more days. Sometimes the down trend, if you want to call it a short-term downtrend, will group 4 or 5 days together. One big day, 2, 3, 4, kind of stalled, but then you had another 5th down day here. This 1, 2, 3, 4. I don't really count that sometimes if it doesn't go anywhere. I mean, that's kind of day 1, but this is really your first down day, 2nd, 3rd, 4th. We got 2 here, we got 2 here. But this gap is a little scary. So you don't get that very often. So same kind of thing here. 1, 2, 3, 4, 5 big down days. So maybe we get a similar thing here. 1, 2, 3, 4, 5. Maybe we get down 6,800. Maybe we get down 6,700. But as it drops more, if it drops another 100 points, you can add another contract or a tranche. If it drops another 100 points, add another tranche. But you don't want to be too close. So you definitely want to sell something, you know, out here. Possibly, you know, instead of having a flat line or step up, you know, you don't really want your profit line to be like this until volatility is like higher, like way higher. So you still might want it to be, you still might want to have a hump here. That's what I would say right now. You still want to have that hump when you're adding another contract. Definitely add another contract anywhere around here, but give yourself a little bit of that negative deltas. That's your protection. So you can sell something out here, 6,100, 88 days, get a 50 credit. That would be a nice addition. You know, if it drops down a little bit more, you're going to make a little bit of money. Then you add another one. You can add one probably even lower at that point for this another 50 credit. And your hump will probably go down a little bit at some point. If it drops down into this range, which is very unlikely to drop down to 65 or 64. If it does, you want to be able to take advantage of that and sell something closer. And why is it holding that? There we go. Then your line will probably look something like this. That's when you kind of want to take the most risk because we have a huge chance of it rebounding. Almost, you'll be almost all in at that point, right? 4 or 5 tranches. You always want to kind of save one, so I don't really. You should always kind of just go to 4 different levels, not really 5. That's why I recommend if you look at, let's see, we'll go back here. If you look at VIX, when it gets into the red zone, I normally get pretty short, but it's still 1. It's just a really wide 1-1-1 where you almost pay for it. And then here you could sell 1, sell 2, sell 3, and then you always have 1 in reserve just in case it goes higher, like we saw before. Like it happens. It's rare, but it happens like once every 10 years or so. See, when it spikes up here higher than 40. I mean, it did it twice recently, so but we could go way back. Let's see if we go back even farther. I don't know how far it's going to let me go back here. See, 2008. You can see every time that's about 40 right there. So every time it's gone over. In 20 years, 1, 2, 3, 4, 5, 6, 7, 8. 8 times in 20 years. That's a little bit more than once every 10 years, but that's every month too. Weekly. So you see 2008, it not only did it go higher, but it stayed higher for a little while, right? Then you can see here, it only went up for a few days and came back down. Here, it actually hit it twice there within a couple of weeks, but came right back down. So when it gets there, you want to be able to take advantage of it. See, within a few days, it goes up, and then it went all the way up there and came all the way back down under 30 within a few days. Same thing here. Like that, it rarely happens, and when it does, it almost immediately comes back down. So this was a crazy move, but if you size correctly, you can hold through all this. Like I held this. I held like here, I was here when it was all the way up here, like 85. My account was it basically almost wiped out my whole account, but I was able to hold in. Like if it went higher, it would have been a big problem. Um, but I was even able to hold this, like even all the way up to 85. That did not blow my account up. I held this, and a week later, I was actually profitable. When it came back down here into the 30s, I wasn't able to take advantage of this. I could not scale up anymore, but I was able to hold my positions, and literally within a couple of days, I was profitable. From down here to here, I've actually made money. And when it happens again, this and this was nothing. I was easily able to hold this and this. Actually, no, this was COVID. I was talking about this one, 65. I wasn't doing this back then. I just started doing this after the COVID spike. So this might have actually been a problem, 85. But it was here. From down here to up here, and then when we came back down, I was actually profitable from here to here. It doesn't look as big with the COVID spike in there, but yeah, I was able to hold through this. I was able to hold through this. So if we did get another spike up into the 50s and 60s, you should be fine. That would definitely be challenging, a pandemic, but that does not happen very often, right? And the last time something like this happened was the 2008 crash, which I wasn't trading back then either. I was in high school back here. But every other one, you want to be able to take advantage of this. You want to be able to take advantage of that. There's things you could do to manage this. You're probably going to end up taking some losses, but there are things you can do to manage your account at that point, because you're almost going to know. You're going to know if it's going to keep going, or at this point you're just going to have to short some futures and give up profits if it does start to go back down. But at that point you're going to have to watch it like every day. But this kind of strategy, it's very stress-free because you don't really have to watch it. You just, on days like today where things spike up, you just add positions and things like this don't happen very frequently. So, but like I said, you're able to hold through these. I wish my indicators stayed through the different products here, but I guess they're not really the same. This dip was crazy. Going from 23 all the way down to 17 in the futures volatility. Like, that's low. I mean, I guess you see it on VIX too, because VIX went down to like 14 something, 13 something was the low. Low was 1338. Like, that's low. That's super low. Like, that's when you basically want to get short the market. That was Christmas Eve. I wonder where it is over here. See, like, it was this day right here. Like, that's so low you almost want to get short the market. I mean, it dropped a couple hundred points. but then it went right back up to all-time highs. This is weird where the market actually went up and went higher, and volatility also went up. You don't normally see that. It's a lot of red days, but obviously it's trending up at the same time. And like this was a big update. What day was this? The 9th? It was right there. So yeah, that's when you had a drop on that day. But this was what, the 2nd? That was this day. Volatility down. Didn't really go anywhere. So the market was down, volatility was down, which is really, well, that's a sign that it's going to go up. Because volatility normally leads the market, so it's interesting when you see those things. A couple up days in volatility. Those are your down days here. It's just really weird. 31st. That was this big day. It's like volatility didn't really go anywhere and the price shot up. This was the 12th. Right there, the 12th. Went up, but came back down. I mean, it did drop a lot and it came back up. The 12th, 13th. 14th. 14th, you had a big down day. Came back up. Volatility spiked. Came back down. Didn't really go anywhere. Didn't really go anywhere. Volatility dropped. But now it's going to drop and this is going to spike up. It's going to spike up to here. When the market opens. It's just kind of weird. Kind of weird. So yeah, if you were to get short the market here, you had like 3 days here where it was under 14. The 24th. That was this day. That was this day. It's the high. So I mean you would have. It's the same price as the 16th, that's so crazy. The 24th and the 16th, the price was exactly the same, but on here the 24th to the 16th, volatility went up 3 points almost. Yeah, well, actually, yeah. The high was 1654 and the low here was 1338, so over 3 points, and the price was exactly the same. So when the price stays the same and volatility is going up, that's a sign the market's going to go down. Price is going to come back to match what volatility is doing. When the price stays the same and volatility is going down, that's a sign the market's going to go up. So look, we're actually back down 75 now. I wouldn't be surprised if it closes at the low, close to the low. And like I've said before, that'll be a sign we're going to drop more. And the moves, the candles will get bigger. So you'll see like, a big drop down 70. Tomorrow we could be down 100. The next day it could be down 150. Like when volatility's going up, the moves are going to be bigger. But then it's the same way when it turns around and goes back up, you're going to get a couple of days where the price will go up 100, 100, 100, 100. And your volatility will get crushed like this. That's when you make a lot of money selling puts. Right, Nova? So, interesting. Good time to take advantage of the markets here, but look out below. Don't get too greedy yet. Wonder if you can see her. Can you see Nova? She's just sitting in her chair. All right, there were a couple of other things we could look at real quick. I wasn't sure if I was going to do it or not, but the posts that I made. Silver 3 weeks ago. Silver's actually gone up higher, so if you were getting short silver here, buying these puts are probably all losers. And also I made a post about crypto a month ago. A lot of these actually trended down a little bit more, so you were able to the smaller ones, actually, I should say, Cardano, well, they all actually went down a little bit lower. But if you looked at them now, I don't know if I'm going to go through them now. They went a little bit lower, then they all kind of spiked up a little bit. So you did have an opportunity to get in at a better price and get out for profit. But if we were to look at them from the prices on my screenshots to what they are today, Poly's actually down a little bit. Solana's down a little bit. Link, I don't know if I looked at Link. Link is down a little bit, I would think. We can look at it. Yeah, 12.8. So, 13.1 down to 12.8. So it's almost the same for a lot of them. Ethereum is actually up, I think around like 32. And Bitcoin is also up. So the two big ones have gone up a little bit. The three other ones have gone down a little bit, or about the same. So from a month ago, from these prices, all five, it's probably a break even. But like I said, if you were to follow them a little bit more closely, got in at a little bit better price than what I have in my screenshots, there was an opportunity to get out on some of them. Like what this is Polygon. We'll look at Link and Polygon real quick. So a month ago, let's just go to like 2 months. Zoom out. So 2 months ago, it was actually around here, right? That I was looking at 3.1. So somewhere around here. So it actually dropped right after that. It hit 12. It hit 12 here, bounced off. That's when I was thinking it might continue up higher. It actually dropped back down to 12, but then spiked up to 14. So if you were lucky, you could have bought it on one of these down days, and got out up here, or came back down again, hovered around here for a little while, went back up. And just a couple days ago, it was up at 14. So buying here and selling up here, up here, up here. There was time to get in and out. But some of these I'll hold them long term until they possibly get up. Like I don't know what happened here. Maybe you could have got really lucky and sold up at 16 that one day. But yeah, let's look Polygon. This spiked up too. So I got in. What was this? It was like 13, I think, is what was in my screenshot. So it actually went down quite a bit, under 10. But then it spiked up. So if you were able, you could, like, this is about the same price. You could have got out up here if you were watching it a little bit more closely. I wasn't paying attention. So there was definitely more opportunity in here. And then pull up like Ethereum. See, I got in like here. They're all the same day. What was it like? It was like Thanksgiving, the 26th, 27th. So this one actually, it did have the same thing where it dipped down, but then it went right back up, and it's still up. It was actually up a little bit more. around 3,400. So it was around what, 3,000? Yeah, 3,000 to 34, 33. Yeah, that's a little profitable. Bitcoin was the same thing. It was like right around here. So it dipped down, went up, came back down, came back up. So if you got out a couple days ago, you could have got in around 90. It was around 90,000 one of these days, and you could have got out at like 96. So don't do it. I was gonna say something. What link was the other one? Did we look at that? Oh yeah, we just looked at that one. So yeah, there was I guess we'll just go through them. Why not? ADA was the other one. Cardano. Crypto. Yeah. I don't know why that doesn't pop up. So ADA was the other one. It was around 40, I think. 42, 40. It was right here. So same thing, it had that drop, and it went a little higher. It's a couple days where it spiked up higher, but then dropped down to like 36, 35, which is really low. I don't really remember it getting that low before. But then again, it had a couple days where it was up a little bit higher here during the day. So, but all in all, that one's probably the worst one from 40 down to 36 now. But let's zoom out on this one. I don't remember it being, hasn't been on here very long. I don't know if it's ever got that low before, yeah. That's like a new low for it. So you never know. This could spike up. I was looking at, this is a week. So I was looking at it here. So I mean, it dropped from, what, 90? It was over $1. Went over $1 two times. Here. So it went from $1 all the way down to like 35 cents. So we could see, it's going to float around here for a while. We could see it rebound up to above 50, maybe 60. So you never know. If you didn't get in before, it could be a good chance to get in now. See, it doesn't really stay down that long. Drops, comes back up, drops, comes back up. This is the first time it's actually hovered around the low for a while. But I got in here last time. I think we bought in, maybe it was right when it came out. I think I bought it right when it came out around 45, and it went up to like 90. I like doubled my money pretty quickly, a couple weeks. The first time. I don't know if I hit it again. But that was what I saw basically. I got in under 40 a couple of times. It looks like it didn't get back down there. Maybe it was just once. Maybe I bought it in the 50s. That's the second time. But yeah, we're at new lows here in Cardano. Go through some of the other ones. Link got down to $2, $3, $4. This is not the crypto. Let's say these are not the right prices. There we go. 10. That's what it was. 10 and 12. Doesn't get below 12 very often. 12, 12. I got in down here, which was really nice. I bought it under 12. I literally hit the bottom here and then sold it at like 20, which was like here. So I caught this move. Which was really nice, but now we're back down here again. So it always seems to bounce off 12. Link does. Solana. Solana's always a good one. my internet's not cutting out. But yeah, see, we you know, it dropped down to 100 twice, and highs are like 240. So I caught this move. I got all of them when they were like low here. I bought in at like 135 last time. Sold it over 200. Got back down here under 130. This was pretty low, down 116. So we could see it spike back up to, 170, 180, something like this. Probably not going to see this. Probably not going to see this, but you never know. I don't know if it'll get back up over 200. It might. What's it at 130? It could go to 200 or it could go under 100. So I don't know. I think the risk I think is to the upside. So I wouldn't short it. I think it's a better buy than a short. But it's a really small part of the account, like 1%. You just hold it. Hold it until you hear crypto's spiking up, and then you go in and sell it. And then what was the other thing? Silver, SLV, the Silver Trust. Look at this. This is crazy. Let's zoom out. Back in 2011, it spiked and got over 46. And 2020, it spiked. This was actually a pretty big move. This was a big move, which is crazy. It went from what, 10 to almost 30. That was like COVID time. And then now, I mean, it was back up to 30, which was like the high. Never really got up above 30 before, except for here. I think it did one more time, like way back farther. But it just freaking took off. That's such a crazy move. It's actually, what was down the other day? No, it's up today, I think. We got to look at the futures. Look, it's up 6% today. That's crazy. It's at the highs. It's literally at the highs. The futures don't go out as long, so let's turn this into like weeks. Like, look at that move. That's a crazy move. Up, 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 up. There was the 1 week it went down, and that's when I looked at those puts, and it just turned right back around, went right back up. So let's look at those. Let's actually look at the price on them. I don't remember the expiration. Doesn't say, does it? Yeah, it does. 417. See, it was at 71. It was up $6, up to 71. This was actually the day before it dropped, too. I said something about shorting silver, and the next day it dropped. So yeah, 417. Let's look at that, and then from 55 to 50. April 17th. That's still 88 days out from 50 to 55. So 57 cents to $1.08. So this is now 57 cents. And this is $1.08. So yeah, big losses. I mean, let's just say that's $1. If you bought it for $2.50, it's only worth $1 now. So that's a big loss. But this is also something that you would want to do with a very small part of your account, like also like 1% to maybe 5% max. Yeah, so the potential the potential when you do a trade like this, like the risk and reward is either you're probably just gonna lose all that money if it keeps going up like it did, or if it does fall down to this level in a decent amount of time, you could maybe triple or quadruple what you paid for it. So the 250, if the price dropped back down to 50, your 55 put that you paid 250 for could possibly be worth 750, right? So you make $500, make 200%. But it would have to do that with some time left in the trade. Can't be at the end of the trade. That's why I did it so far out in time. Which it's actually a 4 delta, so that's pretty far out there. But the 55s, that's still a 7 delta. It's weird they have the It's weird that they have the standard deviation line there, because that's not, I guess it's just some crazy skew in here right now. But this is the expected move. I mean, it's expected to possibly get back down to 60 in the next 88 days. If it does drop, I think it's going to go past the expected move, right? So it could still get out here by 88 days, but if it gets here at 88 days, this will still be worthless. It's got to go past it. So you never know. If you're buying this now, it might be a decent play. See, they're worth, at the money right now, they're worth $10. If it were to get down here tomorrow, this would be worth probably a little less than $10. The volatility would probably come in a lot, so maybe $9, maybe $8. If it were to get down here in 2 months and you had 1 month left, and you can probably see here what the at the money price is now with 2 months left, or with 1 month left, $7. So it'd probably be less than that. It'd probably be like $6, $5. So still, if you paid $250 for this and it does get down here in the next 2 months, maybe it's worth $400, $500, so maybe you could still double your money, but it probably won't get up to the 750. But if you want to get short silver now, well, even tomorrow when it opens, this is going to be less. But you could do like a 60 put for $200. It'll probably be less tomorrow. You could buy the 60 put. That's inside the expected move a little bit. If it does come back down, it might go down to the 55, maybe to 50. In that case, this would be worth $10. So you buy it for 200, it might be worth 1,000. So each contract. But you never know. Time's on your side when you want to if you want to short silver. Don't expect it to drop right away. But when it does start dropping, it's going to drop pretty fast. So I'd be careful playing any short-term options. I would just go out further in time, put something out there, and just make sure it's a really small part of your account. But yeah, that's it for today. The 1-1-1 trades seem to be the best, and it's a good time to scale in a little bit now. If you didn't scale in, last week? Volatility is spiking and the price has been the same, so that's saying that the market's probably going to drop. And I was just talking about it with my dad the other day. We're saying we're probably going to get a down day today, tomorrow, and here it is. So, but it could continue. So don't get too close. Don't scale up too much too quickly. All right. Thanks for watching the video. Hit the like and comment any questions you have. Let me know if you learned something. Thanks. See ya.